Shell has been given the green light to drill off the west coast. The oil major applied for authorization last year. Up to 5 deep water wells will be drilled in the region in hopes of finding significant oil and gas reserves. Shell's previous exploration program along the country's east coast was disrupted by court litigation. This related to concerns about a lack of public consultation and potential harm of the marine environment. Cumbersome bureaucracy in the meantime has stifled South Africa's ambitions to develop the country's oil and gas potential. Schroder's property portfolio value has dipped. The London and Johannesburg listed REIT's property portfolio is independently valued at 193.9 million euros, down from 194 million euros in March, representing a decline of 0.05% rather. From the end of June last year, the downward spiral is larger at 6.9%. But the property group says that its total portfolio value remains resilient in the third quarter, thanks to robust industrial valuations in France and the Netherlands, along with an uplift in Berlin, which has helped offset declines in other sectors. African Bank is a step closer to securing Eskom's 5.7 billion rand staff home loan book. The power utility nominated the lender as the preferred bidder for these assets in December. And while the conclusion of the deal was expected in the first half of the year, Eskom has just completed the negotiations on the terms of the transaction. The deal is now subject to regulatory approval. Both parties stand to benefit from this arrangement. For Eskom, the deal fulfills one of the conditions imposed by the National Treasury in a 254 billion rand debt relief package to the entity, and for African Bank, it strengthens its foothold in the secured lending space. The lender still has ambitions of listing on the JSE. The B20 SA Finance and Infrastructure Task Force is pushing for the relaxation of Basel III capital requirement rules. This in a bid to give banks more room to invest in infrastructure projects to help reignite the continent's economy and integration. Basel III was put in place to make banks safer post the 2008 global financial crisis, which caused the failure of many banks. But Standard Bank CEO Sim Chabalala, who chairs the B20 task force, says that the capital requirements impose disproportionately high risk weights on infrastructure investments.